Good morning. Good morning.
All right, good morning and welcome. It's Thursday. It's time for Thursday's morning market tour. And another interesting overnight. So, I want to start with definition of the overnight. This just for future reference, this is not relentless uptrending. This just through midnight or ahead of midnight. That's not an uptrend. The reason why I'm starting here will be clear in a moment. But yesterday's cash session close was basically 40.59. We've got a pullback, not a substantial pullback, but a pullback to about 40.52, 52.50. Notice that the last hour's range in all of that pullback from the high, that is the pre-close high, to that last hour's entry. That is a 61.8 retrace, and that's it. If I back out the errant ticks here. So the lower low, it's not even lower lows, it's so borderline. That's really what I'm trying to point out is whether we can, whether it's a deep enough dip to qualify as an attempt to downtrend before ultimately reversing up. And looking at where we're at now, just retrospectively, is this relentless overnight trending? Relentless overnight trending, of course, being a setup that can be predictive. Relentless overnight trending can be predictive of this morning if this remains intact, which I am going ahead to qualify as because that pullback holds 61.8% of the last hour. That's a timing window. The final hour's rally. And then puts in through every other timing window overnight some uptrending, higher highs, higher lows. If it's an actual lower low and lower high, it is in the name of forming a continuation pattern. So this is relentless overnight trending that, if it is intact into the open, lets us monitor the open, the first 15 minutes, the most volatile window of the day, first 15 minutes of volatility, to identify whether this has gotten ahead of itself and there's any downtrending discernible during the first 15 minutes, discernible downtrending during the first 15 minutes as between 9:30 and 9:45, which would indicate that counter trend sponsorship has taken over. It's tough to get the overnight crowd to stick around and keep sponsoring and helping out the intraday crowd, and sometimes it's such an extensive and expansive move that there's sellers and they don't attract reinforcements, and that will tell us how deep this morning could pull back, or we get reinforcements. The easiest, most discernible observation there would be if the first 15 minutes at 9:45 had ended above whatever the overnight high turns out to have been. I mean, this is literally a moving target right now. So, and I'm sorry, there is one other setup that could be bearish if instead of trying to exit the first 15 minutes above whatever the overnight high has been at that point, during those 15 minutes, there's a probe of fresh highs that's rejected under the opening print, preferably as well under whatever prior low there's been. That would be bearish. So we don't have to form any one of those setups. And we won't get a signal to that effect, even if the relentless overnight trending is intact going into the open. But we'll be watching for that. So this otherwise is playing out. I mean, as we've been discussing, there's just been so many accumulative patterns, Fridays especially, that told us in the morning that the balance of the session would trend up, and did so to such a degree that it satisfied that buying pressure. And we came out of the weekend reinstating it. But all that accumulation wasn't even rewarded until yesterday's open. and then it was improved upon to gain traction. Didn't have to extend higher overnight, but we anticipated extending higher out of here. If there were an initial pullback. The objective has been to retest last Wednesday. Last Wednesday's FOMC highs. That's all that action from last Wednesday afternoon. And now we're assuming, since we're already trading 40.80, do we get to 40.83.50? That today's open will test it. Maybe there's some sort of a reaction down before then. This is not a quiet morning. Economic reports have been thin. Fed speakers have been thin, but there's some coming out of the woodwork here during the noon hour, talking over each other. And then who knows what others might be appearing wherever on media. But we've got GDP and claims and any special insights therein. So maybe we find out the overnight rally has gotten ahead of itself from a contrarian perspective, too optimistic, at least in the near term. There's a lot of room for a pullback to what would be then lower prior highs of last Wednesday's upper end, or even back to unchanged. Remember, yesterday's target was 40.60. We haven't actually closed above it to put into play necessarily any higher targets, but I've got a lot of resistance that comes in. 40.88, 40.92. Starts at 40.88. I like to have a singular numerical representation, but if I have a range, it's because there's such preponderance clustered there of dominant patterns from their Fibonacci extensions, structural extremes, etc., that we're referencing 40.88 to 92. But 40.92 is really strong case that we're going to hit 40.92. And the next higher would be 40.99 to 41.02. Actually, 40.99 is the most prevalent in that range. But then, of course, last point about the bigger picture, and then let's move on. And that is, this is all part of the downtrend from February's high. February's high, left unfinished business outstanding, that has told us all along that this, what began as a channel for a couple weeks and morphed into another channel that we've switched between, would be entirely retraced per requirements of the price action that had formed at that high, that we'll get back to focusing on or describing as that's approached again, which doesn't look like it'd be too long. But there's just the last touch of this downtrending resistance. Already a pretty good last Wednesday attempt to overthrow it that's now being rejected. 40.74 being the next higher target. Actually, its test up to 40.77. Not met intraday. It doesn't have to be, but usually is before a significant reversal can develop. But that is the next higher attraction. That's 41.19 if we can get through 40.74. No bearish reason for that. This ongoing decline doesn't need to refuel to that degree. So as long as today can maintain some bullish ending, we could trend straight down from the open and maintain a bullish trending so long as it doesn't close negative. So that's a not generic or vague, but a generalized statement anyway. But if at the close we're talking about, during the wrap, if we're talking about a bullish close, any traction gained or the upside momentum, the uptrending not rejected, then we are probably looking at the best confirmation that the rally, the return to February's high is intact, or underway, that is. So meet back here at 9:15, and we'll see what reactions to economic reports, which I'll mark up the chart at the time if anything relevant or predictive happens. And we'll see what immediately actionable setups might have formed. And then at 9:30 for the open. All right. Other markets, just checking in with the euro, which filled its gap on Tuesday. I mean, we were looking for, or needed at least, for this reaction down that had developed all the way into Friday's close, closing under prior highs, needed to be rejected coming out of the weekend, and it was. It's just unfolded just fine since then. Tuesday filling a gap, and yesterday not rejecting that gap fill, itself suggesting we're extending higher. That's a 61.8 retrace, by the way, back to the high. So that's presenting resistance, but again, not rejected after a full session. So presumably this is anchored, and if there were some knee-jerk reaction down, it's likely to extend higher. Silver, sharply higher. And this is doubly bullish, if not triply. But let's first point out this rising wedge that had broken out and closed higher for second consecutive session last Friday told us to expect an eventual third higher close, which is great when that's not immediate, because that tells us to expect that any pullback, in this case the pullback extended, to anticipate that this is going to resolve up into a higher close, often at support or off of support. And this did test the support pretty much back to the apex of both uptrending support and resistance of that triangle, knowing there's a close above 2370 in the future. The gap above all prior highs of 2353 is a separate setup, telling us this required being filled from below. Gaps to closes don't require being filled. Gaps to opens in multi-session trending above all prior highs or below all prior lows do require being filled from below eventually. So we had all this great setup, and then finally we know we've got a fresh high close coming, and maybe that's all one higher close, maybe 100 higher closes, but that's probably in play now. 2353's gap was filled yesterday, and yet we're extending higher. So I'm anticipating that we're going to have more than just one higher close. And that's clearly being attempted today, at least one. Gold, I need to roll coverage forward, but same chart. Still anticipating that if silver's extending, gold should as well. What's going to be important is whether it extends through 1983. You know, if the market's not collapsing or nervous, apparently it's not, the stock market, that takes away one attraction to gold. And it's not following silver higher in suit. Silver may be helping gold delay a deeper pullback here. As far as a head and shoulders pattern, this right neckline to shoulder has held at a retrace of the left neckline shoulder structure. You can see the 61.8% retracement. That's a Fibonacci relationship. It doesn't have to get back to the high of the left shoulder to still be symmetrical. So if this, that's now being held up, presumably in sympathy with silver, were to give way to close negative today, I'd even consider that to be a sell signal. Now that we're firmer and silver's putting in that relative outperformance, I would just assume that 1960 is a sell signal that gets this head and shoulders underway. Head and shoulders, remember, as a reversal pattern, the reversal, that when it puts in a reversal instead of a continuation, that tends to be a temporary move before completely recovering. Long bond, interesting, not much changed despite one, a deeper pullback attraction that's in play, and two, clearly no flight to safety triggered overnight. So why isn't the long bond down a little bit more? That's curious. It's not up, and so I am still anticipating that we're forming this distributive pattern, at least maybe it's a stalled rally. In any case, needing to find stronger handed buyers below before resuming the rally. Having said that, this overnight action is curious because of the relative outperformance when it doesn't need to be, or relative performance that is not as underperforming as it could be, would be justified to be. So if the long bond were to close at this point, I'm lowering my buy signal back above what had been resistance, 131.10, 131.12. I'd take that as an internal breakout. Otherwise, we're on our way to pulling back 127.14. And then crude oil is back up into this range. This was the maximum bounce limit for a stalled decline that needed to find stronger-handed sellers to sponsor the next down leg. One candidate was responsive, but never reversed the trend down. In fact, 67 held overnight. The last couple days have been spent testing and failing in the 73.35, 74.45 area, which is the maximum bounce limit for still being likely to resolve down and resume the decline. My target is 62 for a more durable bottom. So it's firmer overnight, still not rejecting it, holding it, and potentially, as opposed to rejecting it, chipping away at its resistance. It's not that bad looking a pattern. I mean, it's not a bad pattern at all if it can get through on a closing basis, especially for 2 consecutive sessions, this 73.35, 74.45 area. My signal, if you want to sell into strength, there's the strength to sell into. If you want to cover at a loss what was sold into strength, my suggestion is the next higher Fibonacci at 75.80. I don't want to be short above, especially on a close, but above 75.80. But momentum starts reversing down under 71, targeting 62. All right, then Bitcoin, and this is kind of interesting about the overnight, because last night, here's a 5-minute chart. Last night, this spike just emerged kind of from out of nowhere. It's internally, there was a consolidation. It broke out at its inflection point. Huge move, retraced entirely. In fact, the kind of like screaming down the highway, slamming on the brakes and skidding up under the curb before settling back into the lane. That defines this overthrow to the downside that ultimately settled back at the upper end, maintaining the breakout, but not extending it. What's interesting is that happened here. That happened here with ES, blipped up as well, retraced entirely with Bitcoin. ES, as you can see, has gone on to bigger and better things where Bitcoin has been left behind. So kind of curious about that on both counts, because Bitcoin had somewhat detached itself from ES as far as a risk-on destination. Began trading more intact, more in line, I should say, with inflationary inputs. And now here it is, in fact, not extending higher with a risk-on sentiment that's in the broader market. So I'm not sure that we used to be able to, at least for a while, consider one to be a precursor to the other. We haven't yet gotten back to being able to rely on that. So question is whether Bitcoin is suggesting that this isn't a risk-on, it's not a risk-on asset anymore because it's not trading higher with stocks, or is it undermining stocks' rally here before the open can establish whether it's going to maintain its rally? So just food for thought, nothing really to do with it. Bitcoin is otherwise bullish. Triggering the buy signal on Tuesday, back through 27.5, doing very well with it, but most importantly, maintaining its recovery through a 24-hour window to confirm it. In fact, another 24-hour window confirming a subsequent probe above 28.1 resistance. Nice touchback here to hold lower prior highs as support. And following with Ethereum that had already probed a fresh high, its own fresh relative high back here before pullback. So still looking at this, is on its way to plus 30 plus, probably 31,000 handle, and a brief consolidation before extending higher more substantially than the market will be prepared for at the time, if there's any upside at all. Little deterioration, divergence in RSI on the surge here last night. So that'll need to be overcome before RSI is dragged any lower. All right, so any questions about any of that, please ask. Meanwhile, again, I'll mark up the chart with any interesting behavior on the pre-open reports. Meet back here at 9:15. Good luck today. At its inflection point, my signal, if you want to sell, momentum starts reversing down under 71, targeting 62. All right, then Bitcoin, and this is kind of interesting about the overnight, because last night, here's a 5-minute chart. Last night, Okay, welcome back. So, interesting developments since the planner session, the recording. But to point out, let's play Sesame Street. One of these things doesn't belong here. What's different among... I'm going to get rid of this last hump just to make it easier. If you look at these swings in between, since yesterday's close and current, we've got downward sloping bull flag, upward sloping ascending triangle, downward sloping channel. And the ascending triangle, that reflects impatient buyers. It's not a sell signal, it's context. Often that's going to lead to the next, or lead to a extreme sooner rather than later. It also presents pretty interesting support. In other words, if we started plummeting down to this ascending triangle, especially during the first 15 minutes of the intraday, being the handoff from overnight to intraday, and so still being influential. If we were testing that as lower prior highs, around 4074 having another relevance, by the way. 4074 being the upper and the high, actually, of last Wednesday's FOMC fun, the pivot reversals. But if we were pulling back to test 4074 through the open during 9:45, before the first 15 minutes, it would be pretty interesting, compelling support. But also the pattern that it is part of, especially what it used as last relative lows, basically down to 4072, would be pretty critical support and an accelerant. Start breaking under 4072, and we're probably extending down. Not that any of that has to be targeted. In fact, I've got a sell signal here at 4080. What got under 4080 when it was actually met? A sentiment extreme, errant ticks. There's now no bullish reason to revisit that coming out of the open as well. So this is the first setup that I can see under 4080 into the 4072-74 area, regardless of its resolution. If this entire band, if that 4072 starts giving way, I would assume that the relentless overnight trending that I described would have found counter trend sponsorship, in which case we'd look for a 61.8 retracement of the entirety. That's the attraction, not a buy signal. But I'd be looking for 4065, 65, 66 area to be tested. At least a 61.8 retracement. Otherwise, if and by the way, probing the overnight high and then rejecting it by 9:45, as I described during the planner, that's also bearish. The only overtly bullish behavior here, we can trend up without any setup because we're already trending up. But for confirmation's sake, exiting the first 15 minutes above the overnight high, that would give us a higher degree of likelihood of extending higher this morning. And then one last note I didn't intend to share, but as long as we're doing this, if the last minute and or 2 minutes pre-open, literally the last minute or two, surges, doesn't just eke higher to a fresh high, but literally surges, that is last minute optimism, and from a contrarian perspective, bearish. All right, that's all that we can go on right now. Any questions, please ask. I'll be right back. if you're just joining us, I've got some. If you scroll back, there's some links to a couple of recorded things. Last night's pre-close market wrap or closing wrap, pre-open at 7 a.m. We did a big expanded review, and I described next higher attractions, laid it all out, like 88.99 or 88.92, and then 99. 4101, which are just numbers. You want to see the context, though. And that's if we get through the first 15 minutes extending higher. So, by the way, in the blog, if you're a subscriber and you don't catch one of the recordings or the live episodes or the taping that is, or recording, we've got all sorts of resources in the blog that list, for instance, the next higher levels, lower levels. There's a reference sheet that has a lot of other stuff that we refer to. So there's the open, and by the way, just a couple, 3 minutes maybe before the open, we did get a last-minute surge, and that is just so typical of extreme sentiment. Fresh high, now not post-open. It actually wouldn't have mattered had this extended post. Sorry, that extended post-open, it's the timing of that sentiment extreme that really tips us off that we've got last-minute buyers that are finally getting positioned or trying to exploit the open. It's not necessarily a sell yet because we haven't rejected it throughout the first 15 minutes. And until 9:45 comes and goes, isolating that probe, as shallow as it is, it's still a sentiment extreme. Maybe we recover, but in case not, in the interim, I do have some ideas as to what support needs to hold to keep upside alive, and what support, if rejected, starts telling us that we're instead heading a little deeper, at least a little deeper, to refuel buyers, if not reverse down to give sellers traction. So premature, the first 15 minutes, I call it the first 15 minutes open volatility, opening window of volatility, because it is that, the opening window of volatility. There's so many different influences, sponsorships, interests, and motivations that are converging on that window in that period. Everything from mutual fund orders that John and Jane Q entered in their online brokerage account overnight that are coming in blindly to, market makers, specialists, etc., moving the market to where they see orders coming and best way to position for that. It's also an opportunity. There's also a lot of observation, intense observation, intensified as the overnight crowd that's responsible for this relentless overnight trending to decide to what degree they're going to give any further room to what they may be holding or maybe trying to get back into. And the intraday crowd now assessing that as well. It's definitely a bigger price than they could have paid yesterday. Are they getting scared into getting long or inhibited? So this is just coming up on being 1/3 of the way through that. 3 minutes, the first 3 minutes is the most volatile window of that. So I have a number of setups that are focused around that, and often, you hear stay out of the market during the first 15 minutes, first 30 minutes, first hour, come back in the afternoon and see what the market wants to do. There's so much volatility in the first 15 minutes. It's not always tradable, but for a scalp, and I don't mean a scalp through an inflection point where we look for around 3 points pretty quickly, but where the initial intent, seemingly obvious and reliable intent, is within those 15 minutes reversed much more substantially than many intraday reversals, organic reversals otherwise. So I created indicators that can identify that from pre-open action, like this last minute sentiment when it appears in those last one or two. In this case, it was a third minute pre-open surge, fifth minute getting there, but not rejected by the time we got to the open. Then right afterwards. So when we see that, that's just giving us a clue. Do we want to chase that higher? Probably not. Sometimes maybe we'll be kicking ourselves for not having done so, but the majority of the time it works out. And often that'll be such last minute and more significant extreme that it offers a short entry opportunity. And that works to the downside as well, by the way. Most setups do. But I've calculated this pullback limit area, this sweet spot of support that was just relied upon pre-open. Here's my line in the sand that you can see it isolated another sentiment extreme below. There's really no bullish reason to be revisiting this. Not after its first test was already productive. Now we dipped down into it. Had we hovered here, bounced a little but short of the pre-open high, and then dipped, this wouldn't necessarily be actionable. I wouldn't necessarily be leaving these levels identified here. So we are, because their test was productive, produced a fresh high, and now being retested again, anew, but for the second time anyway. So there's really no bullish reason to need to refuel any deeper than this previous test. Having said that, it's the first test post-open, so there is some leeway, or these sellers aren't that suspicious yet. Look at all the contextual clues, and that's what we go over. In the blog, I've got them listed out separately. Any questions about them through the day, definitely ask. Right now, though, if we're not using, now we're halfway through the first 15 minutes. If we're not using these first 15 minutes either to trap shorts, weak-handed sellers, or to extend the rally, then we're probably heading deeper. The next opportunity to refuel is down here at 4074, really. Lower prior highs back to this ascending triangle. Look at that optimism, rising bottoms. This could only have been more excessive or extreme optimism by having higher highs, like a rising wedge, running correction. So I'm giving it a benefit of the doubt that if it is tested, it's still going to offer support. All right, so not a whole lot. There could have been a lot more and a lot later. Pre-open, extreme sentiment. So I don't want to dismiss buyers out of hand just because these somewhat weaker-handed buyers were so obvious pre-open. Is this enough to reflect that or to correct for that? Could be. I don't want to buy the dip, but I'll buy strength out of it, enough strength out of it, especially as we start getting 2/3 of the way through the first 15 minutes. And it's basically going to be 4084. So back above 4084 is an inflection point. Which, by the way, also means that if 4084 were probed, if it's a valid inflection point, it either holds obviously, or even if it's going to fail ultimately, immediately, pretty much immediately, delivers several points, like around 3 points pretty quickly. Some subscribers just make a living out of that alone, not having any interest in any other behaviors. So 2/3 of the way through the first 15 minutes. At this point, we can see some discernible downtrending. We have to incorporate for it to be more discernible, we have to incorporate this last minute surge. But you can see lower low, lower high, lower low, lower high, lower low. Since there's something else going on here, the relentless overnight trending, that is, as I described during the planner session, how we arrive at that definition with this overnight pattern. Go back and watch that if you aren't aware. But this is relentless overnight trending. This is a setup. The setup has formed. The setup is formed because the open is being greeted by relentless overnight trending. Now the question is it going to trigger? It doesn't have to trigger. At 9:45, if we've retraced all of this discernible downtrending, then ultimately the entirety of that first 15 minutes will not have downtrended. But if this is what it looks like at 9:45, then the first 15 minutes will have discernible downtrending, defining it. That would reflect counter-trend sponsorship taking control. If counter-trend sponsorship takes control of relentless overnight trending, then just as a working target, we'd be looking for a 61.8 retrace, 61.8% retracement back of the entirety of the overnight range. That's 65, 66 area. So, do we have to retrace the entirety of this downtrending, post-open downtrending to reject it? No, just 61.8% plus. And there's 61.8% being retraced. At 9:45, if we're any higher than this 61.8% retracement, 40, 83, 75, then that won't be so much discernible downtrending. I'd like to see it rejected decisively. $40.85 would be better. Look at that sentiment extreme. We don't know it except in retrospect, but right up to 40.84 is inflection point and back down. And that's what you want to see with an inflection point. You want to see one or the other. Hit a brick wall or explode through it. And even if that means only temporarily exploding through it by several points and then failing. Which, by the way, if you're not scalping inflection points, then what you want to see with an inflection is the first 3 or 4 minute high, in this case a high, being established. 4 minutes during the first hour, 3 minutes the rest of the day. But minimum 4 ticks to start the countdown of 4 minutes. Establish the 4 minute high, which can be 4 ticks higher or 4 points higher or even more. But until that 4 minute high, wherever those buyers were able to get to in those 4 minutes, then after those first 4 minutes, the next minute or later, exceeding that would mean reinforcements had arrived. So probe 40.84 by at least 4 ticks to 40.85 or higher for 4 minutes. And after those first 4 minutes, anything higher would start to reflect reinforcements. Some traders will wait for those reinforcements. Some will wait for the 4 minute high to be established and maybe try and buy closer to the inflection while waiting for the high to be exceeded. Some traders might have a buy stop sitting right here at 84.25 right now and intending to manage that entry if it's triggered. Some may have a sell. Some traders may have had a limit sell at 84 and they're short right now because that's an inflection point. It doesn't always extend higher. And by the way, why not? First 15 minutes are on track now to have trended down discernibly. So the burden of proof is on buyers. We're sitting here 24 points up from yesterday's close, pretty much overlapping overnight highs, not trending down, under the overnight highs last relative lows, and the burden of proof is nevertheless on buyers. And I'll give them every benefit of the doubt for at least extending to the next resistance, which is 88.92. I would assume 92 as opposed to 88 since we've gotten so close to 88 and there's still pessimism so close to it, so much turbulence that probably we're going to need to probe 88. That's a cluster of objectives, structural, prior turns, retracements, just other inputs that are clustered in that area. But I would expect more like 91, 92 than just 88 if we do get something going to the upside. And maybe this is giving us the context, the discernible downtrending post open that's telling us reinforcements didn't arrive. Overnight buyers did not attract reinforcements. So maybe it'll take, though, that higher 91, 92 to attract stronger handed sellers, and we'll just plummet right back through this range. I do want an actionable sell signal. Here because of that, especially because of that discernible downtrending. My objective is 74. So not a huge reward from here, not for the size risk I want to take. The ratio, even if I were very, very confident in the drop developing to 74, it's never going to be 100% confidence, and so I need a risk that's commensurate with that and with my own risk tolerance. So let's say I'm not going to just sell this sitting in a standing stop, but let's say I'm going to sell say a fresh low, 78. So that's 4 points. Is a 2 point, looking for a 1 to 2 risk to reward, is a 2 point stop really manageable? Probably not. Now there's implied odds if 74 doesn't hold after all this time. If the added information we have from the relentless overnight trending having been met by discernible downtrending through the first 15 minutes, that suggests we're heading to 65, 66. If I sell 78 for a 12-point target, I can afford a 3 or 4 point stop. That 1 to 4, 1 to 3 risk to reward. So that would make sense. I might even be able to raise that momentarily, the 78 sell signal. If this bounce extends higher enough. Now, nothing that happens here is going to define the first 15 minutes. The first 15 minutes have finished. They're in the books. Also, where do I get 74, 72? That's from this overnight pattern that had developed. Lower prior highs, last relative low. That's still a relevant area. For other reasons, 74 was, for instance, last Wednesday's high. It chopped around on those pivot reversal setups. The FOMC reaction, that is, that afternoon, or the Powell reaction, really. What is the first 15 minutes? It's a handoff from the overnight to the intraday. After that, if the overnight hasn't created some price action or created patterns that created price action that preserve whatever that overnight pattern was looking at, the overnight really doesn't figure into my work intraday. There's just a couple of inputs that I'll take from it. But otherwise, I'm no longer interested in what happened along the way up overnight and where. Sure, the 74 is relevant, but that's because it was relevant intraday last Wednesday. We already know that from the intraday data. So I will try to get a little more aggressive on the sell signal, but as much as we've made it through the first 15 minutes, even with the discernible downtrending, if sellers aren't able to exploit that now, they're going to try to exploit it from a higher level. So a question, are there any implications to SPX gapping open 2 days in a row on no headlines other than no banks have failed recently? And that's funny because a couple weeks ago, I was looking for bank failures as being bullish because that meant we could get a bank rescue headline. Anyway, yeah, I mean, that's a very specific connection to draw, and there's a lot of news from a lot of quarters, and I don't presume to know what the market's more or most interested in at any given time. There are certainly implications to gapping up to multiple consecutive uptrending sessions or multiple consecutive higher closes beyond a resistance point that had held previous multi-session tests. It's a breakout, it's confirmation. And in our bigger picture, that is absolutely informing it. But right now we're looking at, is there a trade? Did that big gap up on top of yesterday's gap up, did it create, does it reflect excessive, not just extreme sentiment or optimism? You have to have optimism in order to rally, and rallies can be sustainable, but at some point they can get excessive. So you can be gunning down the road, but if you put the pedal to the metal for too long and you see the RPM get it into the red, you're going to burn out your engine. So that's what the setup I've been describing is wondering. Is the engine being burnt out by all this, by these two consecutive higher S&P opens? Substantially higher? Maybe. I mean, we can drive down the road and maybe we're cruising downhill all that time. Or we're hitting a brick wall at Wednesday's highs, which we're sitting above now, and that's great. That's why I'm looking at a buy signal if it'll just be pierced by at least 4 ticks to start the countdown, let alone probe its 4-minute high. But we haven't made it through a relevant window relevant to that prior high. I haven't made it through yet to establish that this is extending higher. And if it does, that's great. Adding to it that it was broken on 2 consecutive gaps up. But meanwhile, the burden of proof is on buyers. For that reason, for that setup, and for other reasons that we've been talking about as well, on a more granular level. So we may be looking at, often when there's a very last minute extreme sentiment, that this is kind of a miniaturized model version of, so not as extreme and not as last minute. But when we see that, very often then when we see the reaction down, it'll be very productive, and nevertheless, the morning will trend back up. I want to trade both of those legs. So that is interesting. That we've got 2 consecutive gaps up, but it's not going to prevent a deeper dip. It'll just tell me that I probably want to buy that dip. Don't ride the dip down for too long. Quarter end window dressing is an influence as well. And we went over this Saturday. We look at the toward the end of the quarter. We look at the quarter. We're kind of down. So down from February's high. Just being higher or lower isn't enough. Well, up for the quarter, but down. We looked at a 61.8 retrace of that quarter's range. That's what a lot of what will inform a lot of those assessments. We also look at the breadth. Is the market up or down because all ships have been rising with the tide? Has there been a rising tide? Or has have higher indexes to the degree that they're higher been a function of just a handful of performers, which is really the case with tech, and even in tech, with a handful of generals there. I'm kind of new to the streaming thing, but I've seen streams and I know I'm supposed to be saying hit that like button. Thank you to those who have, I suppose. I think it gets me ranked better on the YouTube home pages, everything. So I still can't get any more aggressive on the sell signal. Start probing a fresh high, and I can. At the same time, if we start probing a fresh high here, having really just overlapped 84 by a couple ticks, not enough to even start the countdown on identifying a 4-minute high where we know reinforcements are coming in any higher than that. It's really just behaving like resistance, not really being tested as a buy signal. That having been said, I mean, I'm not getting aggressive on a sell, and having reacted down from it like an inflection point and returned to it, I'm more inclined to get long on this sooner rather than later, instead of waiting for the chart to tell us that reinforcements have arrived, or even where reinforcements would arrive. Because we're 15 minutes in and almost 30 minutes now, and we haven't attracted stronger-handed sellers. Stronger-handed sellers don't seem interested in taking control. So again, they may be waiting for the 91.92. Do I want to get long for that? I can't wait too long for that. I may not have that strategy available to me to wait for the 4-minute high to be established, let alone exceeded, if that's all I'm looking for the upside. Do I have a strategy or a tactic in my toolkit that I'm good at, comfortable with? Not everybody does. To just look for a quick 7-point pop and to manage that risk if this liftoff is instead going to behave like this liftoff or this one and actually not be a liftoff yet. So I have a number of different setups that incorporate the early action, the first 15-minute action. The bias setups trigger at 10:15. That's these green and red lines. Almost a no-brainer today. We're above the bias signal, the internal red and green being the signals, the external red and green being their targets. Exceeding the internal, the bias up signal at 40.63 through 10.15 would put into play its target at 40.77. Well, that's already met. So that's not going to be very informative. Unless we exceed the bias up target, 40.77 at 10.15, that would renew the bias up. That's where I start looking for 40.91.92 as being more institutionally expected. We can also reverse back under the bias up target through 10.15, or even back down through the bias up signal by 10.15 and put into play tests of both bias down parameters. We'll know that at 10.15. If sellers are coming in, just if buyers are clearly not being attracted here, not overwhelmingly, if for some reason they start throwing in the towel, we have news coming at 10. Or not at 10, sorry, we have Fed speakers coming at noon. Do you want to stay long for that? Maybe buy it a little discounted after hunkering down, defensively posturing to lower levels. That might be the thinking here. After yesterday's rally brought in all those John and Jane Q Public Mutual Fund orders overnight that are being facilitated higher. So getting kind of surgy. The clock is ticking on 4 minutes, establishing a 4-minute high now that we've exceeded the inflection point by at least 4 ticks. And you can use your own numbers on that. I prefer not necessarily for the trade, for executing the trade, but for the chart telling me what it's doing at any given moment. During the first hour, this is the usual attention span of weak-handed counter-trend sponsorship. So until we exceed the 4-minute extreme, we don't even know where that is, but until we exceed that 4-minute extreme, we don't know if the higher high is being facilitated or encouraged by stronger-handed buyers. This may be stronger-handed sellers getting patient. They weren't getting anything done here. So they're stepping back and letting weaker-handed buyers explode higher, try and get them involved, get them expended, make it easier to push back on them. So, as suspected, the first 4 minutes looks like it's already going to be pretty much at or almost fulfilling the 88.92 area. So by the time we got confirmation that reinforcements arrived for the 92 being generous target, there's no great way to manage that risk. And by the same token, now that another thing that this tells me, now that the countdown is on for 4 minutes, looking for the extreme, which we can now assess the quality of that. Look at that sentiment extreme. Look at the reaction down. That basically disqualifies sellers from being strong-handed for the first 4 minutes of this counter trend detouring back under the inflection point. Just as that 4-minute minimum 4-tick probe above the buy signal started a 4-minute countdown to establish a 4-minute high, it also creates a 4-minute window that disqualifies sellers from taking control. Can't be doing both. This isn't always going to work out this way. It just works out this way so often that it's safer to respect it. That the first 4 minutes after qualifying for that probe higher, that the first 4 minutes, also probing under the buy signal, disqualify those bars from triggering a sell signal. Can't be doing both. Can't be testing. Right now we're in the process of testing the buy signal to whatever degree above or below during its first 4 minutes in either direction. These bars, this minute and the next, is disqualified from triggering a sell signal. Once I know where that 4-minute low is, I'll give it a 1 or 2 point, up to a 1 or 2 point buffer, and get aggressive on the sell signal. Because if after all that buyers still can't or haven't absorbed sellers to get on with what they were trying to establish to the upside, then that tells me new information they probably won't. At least increasingly unlikely. I'm raising the sell signal to 79.50. So I know the 4 minutes since probing above the buy signal, established a 4-minute high that if exceeded would reflect reinforcements. Also established a 4-minute low down to 40, 80, 50, anything lower. Gets out of the realm of that buy signal, no longer testing the buy signal. And now we're actually testing a sell signal. Wash, rinse, repeat. That sell signal is not being tested during the first 4 minutes of testing the buy signal. So it is qualified to trigger or try. It's a minimum of 4 ticks. So the countdown is on to establish a 4-minute extreme. If you're at all bullish, you might be using this test of the sell signal to identify where would I want to get long in this range. If only to retest its upper end. You would need a pretty tight stop program to trade that, or at least now that this extreme is being tested. Remember the countdown? 4 minutes of counter trend detouring. Once we know where that is, we can have an idea where this sell signal's attempt to break lower failed and get long it. But until either inflection's 4-minute extreme is exceeded, we don't yet have a degree of confidence where or how the market intends to resolve this morning. Because it's not doing anything else. We don't have any other information. We have some sentiment extremes in here. We have discernible downtrending out of the open that's already telling us the relentless overnight setup intends to test 65 at some point. The path there is the rest of the story, but I've already paged forward to the ending. Look at the 3-minute chart. You can see the bias up target at 77 offering or being influential. It was influential overnight, but that's not what that's based on. It's based on these levels were derived from price action, patterns that had developed into yesterday's close, not any later. So we don't have at least 4 ticks of counter trend detouring back above the sell signal. So we don't have any way of identifying how much more aggressive the buy signal might be lowered. It's also interesting that since 4 minutes of probing under the sell signal, bounces have held it. held it as resistance. So I'm willing to get a little more aggressive on a buy signal. Again, targeting up to 92. So unless we do get a probe back above the buy signal, the sell signal that is, that using my preferable 1 to 2 point buffer room for noise allows me to lower the buy signal. Here's a fresh low, something else to monitor, something else to assess. Here's a fresh low, not arbitrarily a fresh low, but actually bounced back to a relevant level, the sell signal. Returned to the origin of that bounce, if not also through it. Well, I can make comparisons in RSI. RSI is making a higher low here. It's actually not that insightful because RSI didn't get oversold on that first low. I would prefer to be comparing this higher RSI currently against an oversold RSI. I could call that a positive divergence. 3-minute RSI, I would prefer to see 3-minute RSI in line with that behavior, or 1-minute RSI in line with the 3-minute RSI behavior. And maybe that's why we didn't see it, because it was too bearish. Now, by the way, remember 4074 is a relevant level, not because 4072 to 74. Why don't I throw that in since we're plummeting? Not because of the overnight action there. The overnight action there was behaved this way, that is, because of the week-old last Wednesday afternoon's behavior there, that being the highs. But it was those highs. It can be tested as support and still walk away from this. But now we're so far removed from the sell signal, and in fact under the 4-minute extreme. There's the inflection behavior. At some point, sellers are satisfied. Right now, I can't actually get that aggressive on a bounce limit. Bounce limit is 75.75. I'm sorry, that should be green. So this is just an inflection point. Every horizontal line is just an inflection. Every horizontal line is an inflection point. It gets the same treatment. It identifies when it's reacted to. So reaction through an inflection point, be it a buy or sell signal, or in this case a bounce limit. When it's green, it'll be red. If it's a pullback limit, it's contextual. But it identifies, when it's being probed, it identifies counter-trend sponsorship. Anything below this is just noise. Bouncing below that, below up to, or not even piercing the green line, in this case, by 3 or 4 ticks, that's just noise. We start counting down the usual attention span of counter-trend sponsorship, weak-handed counter-trend sponsorship, if or when that line, either line, is probed. You can trade that immediately upon it being pierced in anticipation of it extending higher. That's not actually a thing, but In some environments, you want to be that much more aggressive, or that's your style. I'll identify the level where to implement that style. Wait for the 4-minute extreme to be established and negotiate entry from there, or fade it. One of my favorite strategies, though, if we're getting a actual trending, once that 4-minute extreme to the 3 or 4-minute extreme, 3 minutes after the opening hour, once that 3-minute extreme is exceeded by reinforcements, that's the assumption, reinforcements arrived, I'm going to give that benefit of the doubt. I'm going to give those sellers the benefit of the doubt that they're not just here for the dip. Or that it's not just sellers doing this. Buyers have to be on board or in sync. How? By not buying. So this is their attention span as well. They weren't making any headway up here, so they're going to let price drop and see if they can defend a better spot. But in any case, I'm going to give those... that move a benefit of the doubt, and if the bounce limit 75.75 were probed, I'll monitor it for a 3 or 4 minute high, and if at the end of those 3 or 4 minutes we're anywhere near the high of it, that means we're that much closer to where we know it's wrong to be short. I just described a really attractive short entry. 3 or 4 minutes probing, not all 3 or 4 minutes have to be spent above the bounce limit, by the way. Just minimum 3 or 4 ticks to start the countdown. And if at the end of those 4 minutes we're anywhere near the high of that 4-minute segment, that's a really attractive short entry, because not that it's any likelier to resolve down, at least not for that reason, for other reasons, perhaps. It's just doing the numbers. It's that much closer to where we know it's wrong. If you play poker, you know some hands you don't want to bet, but you have to because the numbers are there. And maybe it won't be this bounce limit. Maybe we'll extend down instead of bouncing, and I'll have a lower bounce limit, and it's finally probed, and we can apply that. Now, as it happens, 10:15 has come, and at 10:15, we're trading above the bias up signal. So this is a bias up window. That doesn't mean we're going to trend up. It means the bias up target is in play. We've already met the bias up target, so really a retest of the bias up target is in play. Having already met it, it will not be left outstanding as unfinished business if we don't retest it. Usually it will be retested. Usually we're going to get a bounce back to 77 at some point. Whether it intends to hold or just extend higher and go on its merry way. Remember, we have a lot of support at 40.72.74. A lot of support at 72.74, an attraction to 77. Maybe you want a tight stop in here. The inflective behavior is already done. So I can make other assessments as new information comes in, like there's a fresh bounce high since producing a fresh low. Not really much of a fresh low since the interim high wasn't relevant. It didn't return to any relevant level. It's kind of arbitrary. But kind of interesting. I wouldn't mind being a seller up here around 78 if we get at least 4 ticks probing above the bounce limit and the 4-minute high is anywhere close to 78. Let's see how that turns out. But it is bias up. And when I say that 77 needs to be tested, that's it. Just 77. It's not a requirement. Had it never been tested before triggering bias up, and then it's not tested this morning, it becomes unfinished business above that requires a test. But there's 77. It's tested. Sellers are free to decline to the bias up signal down at 63 while honoring the bias up. Part of what the bias up dictated is that this next hour, the bias window, you can see below the chart, you can see the times, the timing windows listed. The morning's bias window, 10:15 to 11:30, starts lapsing at 11:30 into the noon hour. That window, at least until 11:30 starts coming within view, needs to be supported by, or the lower end, if tested, needs to be defined by the bias up signal. Probing under it before then would require being retraced. And it's still a bias up. Yeah, we needed to test 77, but that's not resistant, or it's resistant, but it's not terminal. We may be in store for something even more substantial to the upside. Maybe this just absorbed all those sellers, or at least enough for this leg before a deeper correction develops. Again, what we're filling in here are parts of the story. We know that somewhere along the path, maybe the end of it, of this story that we know so far, is that the 65, 66 area, that's just a rule of thumb, 61.8 retrace is an attraction below because the first 15 minutes were discernible downtrending in a relentless overnight trending setup. Are sellers really going to be so patient with that as to let buyers so aggressive when they couldn't bring it when it mattered, when the big money, strong-handed players, when they typically have tipped their hand, when they've tipped their hands and we see what those tipped hands normally amount to in the patterns of those hands tipping. Are they suddenly going to come in with a surge? You get a news item in here, and yeah, we haven't reversed the trend down. A headline reaction, knee-jerk reaction to a headline could easily produce, first of all, fresh highs. Secondly, overlap the current high up to 91, 92 easily. But organically, not with that artificial catalyst of the outside input, just organically, what are strong hands doing? Well, they've kind of been buying into this, and they'll keep buying, it looks like, all the way down to 65, 66, and still be likely to resolve up, because that's where the bigger picture of having had, for instance, among other things, more important than having gapped up a couple days in a row, morning dips have been absorbed. That's accumulation. Gaps up are that accumulation being satisfied. All right, so we're looking at a bounce limit like any other inflection point. We're looking at 4 minutes until the bottom of the hour, then it's 3, just as a rule of thumb, but a pretty good one, of counter trend detouring. So there's 4 minutes right up here to 78, 75. Anything higher starts violating the bounce limit. Starts, in other words, losing downside momentum. 4 minutes into testing the bounce limit, we're sitting right at its upper end. And another point or two would even go so higher, would even go so far as to tell us that we could be looking at a long. I'm even going to bring my buy signal down here to 80.50 or 81. 81. Think of 81 as a stop and reverse to long on a short that I would enter right here. So close to where I'd know it's wrong to be short. That's very attractive. Doesn't make it any likelier to resolve down. I could even be at 80.50 on this, but doesn't make it any likelier to resolve down. Maybe your stop is going to be tighter. Since this has violated the bounce limit by exceeding its 4-minute high, I can and do need to look at another short entry, which in this pattern is 75.75. Again, great example of one, if not the other. One or the other is going to give us a pretty good example. And in this case, it's not the preferred example, but the point being, there's the stop or stop and reverse to long, because we may have just gotten rid of all these sellers. But if entered well, not correctly, but well, as close to where we know it's wrong to be short, the loss can be limited. When we're using generally a pretty good assessment of what the market intends to do or how it's developing its intent, and we can get our entries priced well, we can usually do that all day long, and the more you do it, the more losers you're going to have, but the more often there will be winners. And if you're honoring the stop, then the winners in that regard, even if there are more losers, the winners have an opportunity to outperform the losers. So if buyers have taken control, their reward is fresh highs, back to the origin of this dip, back to 88, where we knew there's resistance, continues to be resistance, but already responding to that resistance. I suspect if we're heading back to 88, we're going to probe it. So really my objective here on this buy is 91.92. What do I need to see to have any greater degree of confidence in that? Well, as soon as I know where the 4-minute high is to probing the inflection point, or the 3-minute high once we get past the bottom of the hour, then printing above the 3-minute high is reinforcements. That'll give me more confidence. Until then, this may just be a knee-jerk reaction to a headline that is, by definition, sponsored by weak hands. So I don't have as high a degree of confidence that we're going to extend higher. There's a short-term setup here that suggests that we will. I don't have a high degree of confidence. I don't have any confidence that extending higher is going to be maintained. The reason for those degrees of confidence is because the first 15 minutes in the context of relentless overnight trending put in discernible downtrending. Now, was this enough to satisfy that counter-trend sponsorship? Not usually. It may prove to have been. It's not a requirement. This is not a requirement like a bias objective is required, like 77 had required being tested if it wasn't tested yet. Like overbought, oversold RSIs, simultaneously overbought, oversold RSIs, 1 minute and 3 minute RSIs that produce reactions require being retraced. So it's not a requirement that the discernible downtrending coming out of the open or during the open of the relentless overnight trending must retrace 61.8%. That's a rule of thumb. 65, 66 being that 61.8 retracement. Could attack it, could probe it, and trend down relentlessly. But ballpark area is pretty good. And we didn't come close to that. And by the way, I start mentioning this and keep getting sidetracked by price action. As far as that opening 15 minutes being able to give us predictive value, the first 15 minutes don't have to do anything except exist, elapse. And then we get to know the range. What was the range of the first 15 minutes? First 15 minutes ranged 40.79 to 40.85, 85.50. At two more checkpoints, 10 o'clock and 10:30, exceeding that 15-minute range, the first 15-minute range, or isolating probes beyond it. Here's an isolated probe after 9:45, before 10 o'clock. Not much. I really shouldn't use that as an example. That's a knee-jerk reaction, sentiment extreme. Here's an isolated probe below the first 15 minutes. Between 10 o'clock and 10:30. That's the next window. We have the first 15 minutes compared to the second, or the second 15-minute exit compared to the first 15-minute range. We have the first half hour's range. Then, if they were overlapping each other, compared to the second half hour's range. And here's a 10 to 10:30 window that probed the first 15-minute range. And as it happens, also the first half hour's lows. And at the end of that window at 10:30 was back above those lows. And pretty much retracing at least 61.8% of that. Still overlapping it. Just not decisively recovered. This was isolated, but not necessarily rejected back out the other end. We see that often enough, though. In other words, had there been a 10 to 10:30 window that probed the first 15-minute range, and at 10:30 was above the first 15-minute range, not only isolating the probe below, but coming out the other end on a timely basis, that'd be a bottom. We'd be done with the downside. Sellers would be marginalized. Didn't see that. So it doesn't prevent probing higher. Doesn't require it either. Doesn't require or help maintain a probe higher either. I'm still willing to give the upside a benefit of the doubt. The 4-minute high printed, and then we got a sentiment extreme. That's not highly confident. But I'm still giving it a benefit of the doubt. I'll get a little more aggressive on the sell signal. First 4-tick probe under the buy signal. That countdown is underway. That's allowable counter trend detouring. Can't be testing a buy signal. It's allowed 4 minutes of counter trend detouring. And triggering a sell signal with the same bars. Still, calculably, I can give this a limit. I really don't want to see. Here's a sweet spot of support: 78.75 to 77.50. I'm not saying there's a trade to this sweet spot necessarily, but if that sweet spot were tested, it would be a pretty good candidate for long entry. And it's being tested. If calculably, not structurally, not timing-wise, not technically with RSI, MACD, etc. Calculably, I want this to, if tested, to hold the lower end of this range based on other inputs that we're looking at here, other swings. There's a question back to my comment on yesterday's wrap. If the buyers are conditioned to buying dips, they may do it at a tiny pullback to 73 lower prior highs, as they just did. Yeah, I don't. Here's what I'm saying about that. We've gone through now. Going back to Friday, for instance, when we had that opening thrust, bullish opening thrust setup that told us that the rest of the session was likely to trend up. Now that was fulfilled. That didn't get any higher than its target. But then we had a couple consecutive sessions that were accumulative. It doesn't look accumulative, but all of Monday was in positive territory. Tuesday didn't break its bias down signal until it was too late to trigger it, meaning this was a detour. And then that's proved by yesterday's gap up. So we're basically being conditioned by the market to buy pullbacks. These are some pretty deep pullbacks. So the dip off the open down to 73, 72, that's not really in the spirit of what I'm talking about. I'm talking about the market conditioning us that, if we trend down for the morning or suddenly there's a steep drop, the recency bias of the most recent sessions having not immediately but ultimately recovered is training market participants to expect the same, and they don't want to be the last in on that, so they'll start acting sooner. And at some point, they've all acted soon, and there's nobody actually forcing a recovery, and they're already in, and they're not available to help push prices back up, just to prevent that leg from extending for the time being. But this is just noise compared to that. This dip is really just noise. Look at the opening swing. That's just no lower than that measurement. This is the height of the opening swing. Take that away from its low, and that's as low as we got. So we haven't actually put buyers to the test. All right, I'm going to get this into the blog. Any questions, please keep them coming. So I could dissect every little blip at such a granular level it becomes useless. But when I see things happen, even on a very smaller time frame, sometimes they can offer us a pretty good fractal, basically, of what happens on bigger bigger pictures, larger periodicities. So it's worth using that. I mean, if you can see this, I wouldn't really get too caught up in it at the moment, but if you see these are 1 minute bars. If you saw this pattern with 3 minute bars, it's definitely worth taking notice of. But here's basically a double top, and it reacts down, and the reaction down between the swing is at least 61.8%. Happens to be more, and to the 127 as well. And now what are we doing? We're bouncing back into that double top. And again, on a 1 minute, it's just not influential enough to be reliable. But I just want to, as a learning lesson, I think that's what learning is. Anyway, just to use the measurements as an example. Look at this. This is the last bounce prior to that fresh low. A 61.8% retracement of that bounce is resistance. 61.8 bounce of that, or retracement of that bounce is resistance. So, in this 1 minute setup, I wouldn't necessarily act on that, but I certainly want to be aware of the challenges and see them overcome to be able to increase or decrease my confidence and my stop as well. If I back out this sentiment extreme, I can even look at a lower 61.8% already being probed. But this is resistance right here, high to low, extreme sentiment ticks. Making it through 40.84 is a pretty big deal right now. No bearish reason to be probing 48.84. Now, it's still being overlapped. It's not decisive, so there's always going to be always a critic. That's me. Anyway, never going to be perfect, but we can start seeing challenges overcome and have a reason to get more aggressive, perhaps, or to be willing to buy a reaction down from here. Maybe you were just in it because that was the sweet spot of support. It was tested and was at least very close to where we know it's wrong to be long. And that made it an attractive long entry. And so there's a little move you wanted, right to the 61.8% retracement of that leg. That's done. Now, in retrospect, we didn't know it going into it or at the time, but now we see it's a sentiment extreme above 40.84. Suddenly not as confident. So we're going to be thrown about by our emotions. Anyway, this is what price action does. It triggers the emotions left and right, especially the shorter time frame that you look at. You're going to see more volatility, and it's going to have an effect. This at least gives us a rationale to justify one sentiment or another, even if, as I just showed, it can go 180 degrees. Just because after that bar forms that gave us confidence, since it hadn't yet been extended, we know now it's a sentiment extreme, we suddenly lose some confidence. That at least gives us a reason, and we can do something more than just quiver in fear or jump up and down with greed, but actually know why and set a limit to it calculably. What needs to happen now to get back that confidence? We'll get through the sentiment extreme. Pullback limit is 81.75. That's what's being tested right now from above. We actually attacked. We never really got there. At 40.81.75, we're being tested, probed from above. I would start a countdown and see how aggressively I could raise the sell signal. Right now, just coming in at 77. pretty far into the bias window and still no durable downtrending. This dip came too late to be reliably influential to the rest of the morning, but it does nevertheless establish, especially where it was established from 40.72.74, it does establish that these sellers at least, weren't strong-handed. So if we're not attracting stronger-handed sellers up here, maybe the retest did it, we'll see. But if we're not attracting stronger-handed sellers up here, then the market, if it intends to resolve up, is going to have to go find them at lower levels. really noisy in here. We are able to see these sweet spots, but not anticipate they're being tested. Just see reason why they have better opportunity to hold or not, but also higher degree of confidence when they're not. This was already productive. It's not retesting, trying to form a better bottom to launch a rally. This is all overlapping the open, so it's not an extreme. So we don't really have reliable price action in here, and in that there can be these big sentiment extremes, which are just as productive at triggering stops that are sitting there, but not with any lasting input. And such is the case with narrow ranges, which is not attractive to everyone. It shouldn't be. It should be attractive to very few. So if buyers have absorbed selling pressure, the discernible downtrending out of the open, the post-open dip to 72.74, if buyers have absorbed all that and intend to extend higher, even if only temporarily, to 92 or to 4,100, then I do want to see, from a timing perspective, as the bias window starts lapsing at 11:30, I want to see them starting to come alive, be more productive. Fresh lows after 11:30, that's not strong-handed buying. That's patient sellers waiting for those buyers to have lapsed. So come out of here with fresh highs. Really, we're coming to within view of the bias window lapsing shortly. So any fresh highs pretty much in the next couple, 3 minutes would be entirely credible for extending. Again, next target being 91.92 and then 4,100 area. They keep throwing stuff in this range, but here's that sweet spot, tested, retested, now being probed. And so is an inflection down. And when? At 11:15, within 10 or 15 minutes of the bias window lapsing. So these sellers are getting a little bit more credibility because there's no requirement for either bias up parameter to hold as support now. There's minimum 3 ticks. As soon as we got to a minimum 3 ticks to start the countdown under the inflection point, there's a 3-minute low, very minor 3-minute low. I mean, almost the least bit of a 3-minute low. And 3 minutes of counter trending got up to 78.25. We could get a lot more a little bit more aggressive on the buy signal. Which, if we were dealing with a trending range and some pretty usual, as what's become usual sessions, these would be bigger changes. in this little range, it's a pretty big change, but it's also therefore going to be more vulnerable to whipsaw, to noise. And in this case, by the way, we've been able to. I don't think we're going to get anything tighter than this as far as inflections whose 3-minute extremes of being probed by at least 3 ticks are going to be predictive. Either way, whichever way this range, very narrow range, resolves, likely to be productive. And also, just a rule of thumb, it is rare at extremes, for instance, gapping up for a second consecutive session. That's informative in another way to tell us that there is a principle, so to speak, that the morning and afternoon will not resemble each other. Morning's characteristics won't resemble the afternoon's characteristics. The morning's characteristics, in this case, range-bound. Not flatlining. False starts. So there's opining. It's just not getting anywhere. In this setup, the morning, when it ends, then tends to start to get somewhere. Maybe not into the noon hour or during the noon hour, but the noon hour and or the afternoon tend to behave with different characteristics. And if the morning's characteristics are defined as range, then the afternoon characteristics are likelier to trend. So this is a pretty important little range here between 77 and 81. Or the 3-minute extreme on the lower end being 76, the 3-minute extreme on the upper end. At the moment, if this is, it looks like it's going to end here. Let's call it 82. A break beyond 70, this 6-point range, 76 below, 82 above, is now on the cusp of exiting the bias window, entering the noon hour into the afternoon, and being likely to run. So, not a great trading environment this morning, but a great learning opportunity or lab to see on a very small scale the exact patterns that we would look for on the 3-minute chart or bigger that can have the same predictability but with outsized results. So a great opportunity to practice or see what's going on, and then in real time in a bigger range be able to act more quickly and more aggressively. So before producing a fresh high above the 3-minute high, testing the buy signal, there's at least a return to the sell signal, let alone to its 3-minute low. Just an errant tick under it, so not the highest degree of confidence. If we have any degree of confidence in triggering the sell signal, then the sell signal being productive, it's that the open, the first 15 minutes in the context of relentless overnight trending had discernibly downtrended itself. And so far, the reaction down hasn't been substantial, and it certainly hasn't been rejected back to a fresh high. So if we know that somewhere along the path in whichever direction is a deeper pullback, just as a working target, call it 40, 66, 65. And now we can overlay that with, instead of just price patterns, timing windows. The morning's bias is starting to lapse. The bias up, which doesn't have to actually trend up, but is a window that inhibits the bias down mentality that didn't gain traction when it mattered. Now that window is lapsing. So now selling pressure, productive sellers like this, fresh low, absorbed a test of resistance. Not arbitrarily, but back to a prior extreme and lower. Now these sellers get more credibility. So with this fresh low, we have this last bounce. What was the last bounce? What was this 61.8 retrace? Got up to 79.50. There's that much room up to 79.50 while still being not as a target, but as resistance that if tested would still be likelier than not to resolve down. Have to start recovering 79.50 before being able to entertain a buy signal. I can't lower the buy signal any lower than 79.50. bigger bars, new extremes, not big bars within the prior extreme. Look at where it stopped short, right at the 61.8, if not a tick or two lower than the 61.8 retrace of the last up leg. It's a real low-risk short entry. Not that alone made it any likelier to resolve down, but it was that much closer to where we'd know it's wrong to be short. But yeah, other reasons were suggesting that we'd be resolving down. Now, by the way, with the bias window lapsing, now we expect a different character of price action. What was a choppy range should now aggressively extend to fulfill objectives. By the way, we didn't have an interim high. We've been here before, 40.72, and bounced pretty aggressively. Almost back to the highs, but not to a fresh high. So we don't have to probe a lower low. If there had been a fresh high, we didn't return all the way down here just to retest. Having said that, I also would look at this as being likely to extend down, not just pierce like we're doing, but extend from a lower high. Look at this, basically this coiling, downtrending. It's not necessarily definable within a trend that is not definable within a trend of here's a trend line, no, here's the trend line, no, here's the trend line. It doesn't work. It doesn't have to be. That's a channel. This is a discernible series of lower lows and lower highs. That is downtrending. All this selling pressure, all this downtrending off of the actual low, that's coiling, and that's likely to explode through that prior low when it does, and it has. So now we're looking at a new bounce limit. At 74.25. And if in fact we're extending out of here, then we're also likely to be satisfying the 61.8 retrace back to overnight lows. We also have a proxy gap. Yesterday's cash session close was 58.75. Yesterday's target was being tested at 40.60. Today's open, the opening print was 40.85. So we don't have to get to the actual gap, don't have to fill the actual gap. Gaps back to closes don't actually require being filled. The proxy for their gap often is. And that is a 61.8% retracement. Here's the 38.2%. 61.8% comes in at 40.69. It starts getting into the realm of the 40.65, 61.8% retracement of the overnight range. So we can start looking for some sort of pushback around 68, 69. There's a 61.8 of the 61.8, which is, there's the 61.8% proxy gap, the proxy for the gap, back to yesterday's close. Here's the counterpart, 38.2%, and there's the 61.8 of the 61.8. That's an important level to get through. We can assess technicals at that level. RSIs at extremes at that level. At least relative extremes. 3-minute RSI is not oversold, so not as extreme as it could be. But often that's going to extend. Another line in the sand here at 77, 78, just a 61.8% retracement of this last bounce. It's actually a little more complex of a bounce because of this overlap. So maybe a little bit higher at 78. So don't forget, we have a couple Fed speakers at 12:45 over the noon hour. Afternoon bias parameters are on the blog, in the email alerts, and on screen. And presumably we're breaking lower on our way to 65, just as a ballpark, 65. The delay doesn't influence the degree to which sellers now should be rewarded any more substantially. There's other things developing or needing to develop to indicate anything lower. But we are anticipating a different character now to price action than during this morning's bias up window that just couldn't attract stronger-handed buyers. Any stronger-handed than what had already been produced overnight, and that's why we entered the session with the question, not an answer yet, but a question, whether or not the sentiment was extreme or excessive. And it needed to have attracted reinforcements at a couple or three different spots, and it didn't at any one of them. Instead, it was isolating buyers. Downtrending discernibly through the open, isolating probes of fresh highs between confined to windows like between 10 and 10:30, etc. It kept upside alive, or at least prevented sellers from taking control, or indicated that sellers weren't strong-handed enough to take control when there was a dip that itself was isolated, but it was never rejected back above prior highs. So if this, presumably then, if this rally wants to resume or before it resumes, and it still has every opportunity to resume except for one, and that is it's just not attracting stronger-handed buyers up here. So it probably needs to find them lower. 3-minute RSI still not getting oversold. We're not getting any great comparisons there. Sellers just aren't breaking a sweat. They're not over-expending themselves. Here's a higher low on 1-minute RSI. It's produced by a sentiment extreme, so not very reliable. Bounce limit that was probed for 3 minutes, offering a great short entry, is now repurposed into a new bounce limit. Why? Because it produced a fresh low. You can't, you don't need to retest the same bounce limit that just held a 3-minute test and went on to a fresh extreme. Now, often I'll be calculating a new bounce limit, but we're not, didn't extend deeply enough to do that here. All right, so it looks like it's going to be a more exciting afternoon than it was a morning, but the morning still gave us the opportunity to see how different setups may perform. Now, the setups themselves weren't very predictive of immediate fulfillment, didn't go on to be immediately fulfilled, but I'm going to be closing the simulcast anyway. Just keep in mind, check back this afternoon, check the market, put on your screen. We should be extending to the 65 area, and that'll be vulnerable to extending any deeper. Here's something else. If the bias down signal at 69 is broken through 120, we'll be looking for 40.55, see if that develops. You could look at the upside stuff too. Here's a buy signal above 79.50. Buy sub signal 85. Next higher objectives if the rally resumes 92, 99. But we are also, we can take this away, that we're anticipating that the afternoon behaves with a different character than the morning. The morning was range-bound and choppy, so looking for smoother trending or more rewarding trends in the afternoon. That's going to make it difficult. That's not two-way market. That's going to make it difficult to extend down and back up. So unless buyers start gaining traction soon here, we're probably looking at the balance of the session backing and filling or dipping, either way. So, I'll leave the room open or the view, the share, for just a little bit longer. Take notes if you need them on whatever relevant levels. But meanwhile, and here's a risk-reward reference sheet on the right sidebar if you want that. If you need to copy the links from the chat for the 2 recordings that we made, there's 3 actually in there. But shortly I'll be closing this room. And it's reopening tomorrow. Remember, we're going to do this again tomorrow morning. We haven't actually had trending, morning trends. That's one thing that's been lacking. They've been overnight or they've been afternoon. Let's see if that trend is actually bucked with the 2 days of illiquidity that come in. Friday factors is a Friday influence with 2 days of illiquidity that elicits different behaviors. So I wouldn't be surprised if tomorrow morning trends. So check back. Come on by tomorrow morning. starting at 7 a.m. Or if you get here later, the link to the recording that I make at 7 a.m. is available in the chat. But that's it for me here in the simulcast today. The subscriber room remains open. If you want to go to viditrade.com, you can start a free trial there. It's a 1-week free trial if you haven't had a trial before or recently. Definitely consider that. 7 days and you'll see the rest of today and also the entirety of tomorrow, and for into the next week. For a full week, you'll be invited to the Saturday review. And you can cancel that at any time with no obligation. If it goes more than the week, you actually get the Vidi room for free the first term. You just pay for the blog. All right. Thanks, everyone. Have a great rest of your day. And there's that different character now that the morning's bias window's lapsed. More relentless. Nice little break lower here, come back, tag up at the broken trend line, extend down. And there's 65, the target. You can see the reaction to it. Basically 65.25. The bounce limit is 68.75. We know that from the proxy gap. We've been tracking it over here on the 3-minute chart. 69, basically, the bias down signal. If this break under the bias down signal is maintained through 120, and we have a lot of reason to suspect it will be, the relentless trending, this is very brief. Hardly fulfills the new character of at least not necessarily relentless, but more protracted. That's very brief. If this intends to continue trending, it's going to trend A through 65, but B lower. And if it maintains its break under the bias down signal at 120, that puts into play a test of 40.55. 55. So we've got lower objectives. Not outstanding, just likely to be put into play. All right, so again, let's go ahead and close out the simulcast here. My thanks again to everyone that joined us in the live stream. Have a great rest of your day.